Hi everyone, welcome to today's video. So congratulations first and foremost, the market is hitting all-time high, and if you have been following the channel and investing in the stock markets, I'm sure that you would be making a lot of money already. Now, I was sitting trying to analyze which other stocks can I invest my money in. I was especially looking at a few key stocks where I can put in a lot of money, right? So when I say a lot of money, it means a lot of money. So I identified one stock which I'm going to speak about today. I'm going to invest at least 25 lakhs in this stock over a period of time, not tomorrow, not day after. I'll explain when I'm going to buy this stock. Please watch the video till the very end. Only then you will understand the concept. You will understand why am I making this investment. I have not made the investment yet, right? I have shot a lot of live investment videos in the past. I'm going to make investment in this stock. Therefore, I'm shooting it now and telling you beforehand that I'm going to invest money in this stock. It's a safe stock. My goal of investing in this stock is that I'm looking for a very less risky stock. That's one. Second, I'm looking for a stock that can easily give 15 to 20% return. So this is the goal with which I'm investing, and I'm taking a long-term horizon on this stock. So which stock am I talking about? I will not tell you the answer right now. I will tell you somewhere along the video. So please keep watching the video and also press the like button. It helps more people to get financially educated. Alright. So let me start the video by asking you a simple question. So my question to you is that why do you think Apple Computers is such a profitable and a massive company? One single sentence answer. Your answers could be that CEO is really good, Steve Jobs was a visionary, Apple comes out with wonderful products, lot of good things. Your answers are valid, but I'm looking for that one standout sentence on this that literally encapsulates the value of Apple and why is it such a profitable company. Alright, the answer is brand value. If a company has the power to price its product, that means that it has a massive brand value and it can keep on increasing its prices year after year, keep on launching better versions of the product. For example, I'm using a laptop right now which used to cost 65,000. Then Apple probably discontinued this. I bought a new laptop which was close to 1 lakh, right? Next 2-3 years after, they might launch like another laptop 1.5 2 lakhs. So bottom line is that Apple has massive pricing power. And that is the reason why Apple is very profitable. Now you will say, okay, great Akshat, great theory, understood. Can you explain it, how it impacts a firm in the stock market? Okay. So I would want you to take a look at this picture. I'll take you to my screen. Watch this picture. Now I have a specific question for you. It says that the current price of Punjab National Bank is 37.9 rupees and the book value is 84 rupees. Okay. 84 rupees is the book value and current price is 37.9. Now let me show you a second picture, right? Now here, the current price of HDFC Bank, which is again a bank, the current price of HDFC Bank is 1602, but the book value is 379. Now why is there such a massive difference? Look at it again. So Punjab National Bank book value is much higher than the current price. HDFC Bank book value is much lower compared to the current price. Why is that the case? So you will say that, okay, can you quickly explain me? I'm new to stock markets, I don't know what book value is. So can you first and foremost explain me what book value and current prices are? Okay. So current price basically means the stock price, right? So this is what is the last traded price of this particular stock. And book value means that this is what the accountants, right? Accountants value the firm as. This is what the accountants value the firm at on per share basis, right? Per share basis. So this means that the book value or what accountants feel is the book value of HDFC Bank is 379. But the market tells us that the current price should be 1602, not the book value price. In case of Punjab National Bank, the market tells us that, hey, you know what, accountants, you're probably wrong. In fact, we will give the value of Punjab National Bank right now even less than the book value that you have assigned. This is what the basic understanding about the book value and current price is. So now tell me in the comment section, why do you think that HDFC Bank has a much higher market value compared to its book value, which is very different from Punjab National Bank's case? Tell me, write the answer. You will understand this very important concept, extremely important concept, that why understanding this difference and accordingly buying shares is such an important skill. Now let me explain you the answer. Why is there such a massive difference between the book value, which is decided by accountants, and the market price of a stock? The simple answer there is the brand value of the firm. On the book value, the price that is decided by the accountants, the brand value cannot be estimated. Therefore, it does not get reflected where? It does not get reflected in the market price of the traded stock. If I ask you, tell me which is a better brand, right? Honestly tell me which is a better brand. Is it HDFC Bank or is it Punjab National Bank? Now don't say SBI, okay? Don't say SBI. But honestly tell me, where do you think, what type of feeling do you get when you hear the word HDFC Bank? Probably you will see that, okay, relationship manager calls, more active, easy to log into my net banking account, this, that, good stuff. Similarly, if I ask you what kind of feeling do you get when you hear the word SBI or Punjab National Bank, you will probably say lunchtime, right? Or some inefficient feeling, right? So that is what essentially the brand value is. Brand value does not mean that, okay, how old the firm is. That is not the debate. Similarly, if I ask you, what feeling do you get when you hear the word Apple computers? You will associate it with luxury, premium, expensive things. That is the feeling that you get when you hear the word Apple. Now, when the company gives out good services, good products, there is good buzz in the market about that company can charge higher prices for its products. And this small discussion should help you understand the power of brands and the power of pricing. Therefore, in the long run, when you're looking to make investments in a stock, try to ascertain the brand value or try to compute the brand value of a company. If the brand value of a company is good, it means that going forward in the future, that the company will be able to improve its profit margins, and because of which its share prices will also increase because the profitability increases. Okay, great discussion, great theory, something that you learned at business school. How does this apply and which stock you're buying? Can you tell us now, please? Yes. So the stock that I'm going to buy, it's called as Hindustan Unilever, right? It's currently trading at 27.46. Now many of you would jump and say that, hey Akshat, you sold HUL at 2600. Why are you going back, jumping back up and buying Hindustan Unilever at 27.46? Let me very quickly tell you why. Because if you listen to my previous video carefully about HUL, I bought that stock for swing trading, right? I bought that stock with a very clear goal that, hey, buying at 2400, we'll sell it at 2600. I was not looking for a long-term investing stock at that juncture in time. Now I'm looking to make investment for the next decade. Now the goal is different at this stage. It's like me saying that, hey, why are you studying for 12 hours a day? Because you probably want to pass the exam tomorrow. That does not mean that generally you will continue to study like 12 hours a day every single day for the entire academic year. The goals are different and the goals are defined. Therefore, I will be buying massive quantities of this stock going forward. Now, please watch this entire video now so that you can understand my rationale why this stock is going to become somewhat of a multi-bagger in the next decade. Now, this is how people analyze stocks, right? They will say that, hey, the stock PE is 77.77. But if you ask them what is stock PE, they will say that, okay, it is price to earnings. And earnings is a part that you can understand really well, right? Earnings is very simple. So let me show it to you. So for example, if you look at the quarterly results of HUL, you will see, okay, the earnings are this, right? Sales is this, it's going up. In 2021, we are selling like this much amount of stuff. Our profits have been increasing, this, that, right? So all basic things, nothing fancy here that, okay, this is a net positive revenue company, good this, good that, okay, wonderful. But if I ask you that in the PE ratio, there is price also. How do you discover the price? That's the most important part. Everyone keeps talking about that the PE ratio is high. Okay, fine, we understand the earning part. That is very easy. That is available on your balance sheet. But what about price? How do you discuss and reach a conclusion on the price? How can you tell something if it is fairly valued, undervalued, overvalued? There must be some mechanism, right, that goes into discovering the price. Now you will say that, okay, Akshat, you explained me the concept of book value. Now book value is decided by accountants, right? And the market is deciding this as the price, right? This is the market price. So which price should I consider to be right, right? Because if I look at the accountants' narrative, they are saying that, hey, Hindustan Unilever should only be valued at 203. Now, if I look at the market price, then it says that the market price is approximately 2800. So which one should I believe and why? This is the most important question. Okay. So in terms of determining the price, what you need to do is that you need to understand the impact on brands. As I was previously explaining, that the brand value of Apple is humongous. It can't be captured in the book value discussion. So that we anyways have to give up. So you need to understand the brand, right? That what is the value of the brand? That is very important. What is the value of the sub-brands? Because when you look at Apple or when you look at Microsoft, when you look at Facebook, All these companies are acquiring other brands too. For example, Facebook acquired Instagram. Now Instagram itself is a huge brand. Now this brand is made up of several sub-brands. What is the value of those sub-brands? That's the first core thing that you need to understand. Second is that you must understand the growth potential of these brands. For example, when Facebook acquired Instagram, it was a very small company. It only had 30 million subscribers or users at that point in time. Now, Instagram has close to 600 million users or subscribers at this particular stage. The growth has been humongous. So the rate at which Instagram grew, that was massive, and that is what generated the value of Instagram and in turn making Facebook richer. This is very important for you to understand that how do brands also grow. This is a core component of doing long-term analysis. So, understand brands and how do brands grow. If you can answer these two specific questions about HUL, you will understand whether this is a stock that you should be owning for the next 10 years or not. Now, assessing a brand is very complex discussion. Of course, I'll not be able to have that discussion entirely on a 15-20 minute video. But let me give you some important points for consideration. And there are 3 specific things that I would want you to inquire or check. One is that you need to understand the growth potential of a particular company. So if you are taking a look at Apple or if you are taking a look at HUL, then you must understand at what rate that company can grow and what rate that industry can grow. Second, you must understand that to what extent does this brand have a pricing power, right? For example, in paper industry, right? When you buy 1 ton of paper or 1000 kgs of paper, the margin on that is very small. It's like decimal points literally. The reason is that these commodity-based businesses have no pricing power. This is commodity-based business, paper trading, coal trading, whatnot, right? On the flip side, if you're looking at companies like Apple, they have massive pricing power. So if you're trying to price Hindustan Unilever, how would you do it? This is the first key point that we will discuss, that what pricing power does HUL have. Third, we are going to take a look at profitability, because a firm can grow at a massive potential and massive speed, right? It can have good pricing power also, that it is able to raise the prices of its product. But if it is not doing it profitably and there is no scope left for improving the profitability, then probably that firm's return might not grow at a massive pace. These are the 3 key points that you must ascertain to assess the brand value of a particular company. Okay, so let's quickly talk about the growth potential of Hindustan Unilever. I have made several videos on this topic, that why is India's middle class growing, why is it set to become the biggest middle class, and how it will continue to stay the biggest middle class with increasing purchasing power of people. So what type of products does HUL sell? It sells a ton of products, right? From shampoo, hair oil, conditioner, whatnot, literally whatnot. And there are a lot of stuff that the middle class income people buy from HUL. Now, HUL is a middle class brand. It's not an elite brand. So there is massive room for HUL to do both the things. One is that as the Indian middle class grows, HUL itself will grow with it. That's obvious. Second thing, HUL will start positioning some of its product catered towards middle class to slightly more richer class. Okay, this is a very important point for you to understand if you are going to be an investor in Hindustan Unilever. This is the first key point. I will not bore you with more details about why the Indian middle class is growing, all that stuff. That's obvious. All of us understand that. Now let me talk about the pricing power of HUL. Pricing power, because this is a more important point. Before talking about HUL here, let me talk about Marico. So Marico is a company. It is an FMCG company. It launches multiple products like HUL, but it has its most famous product, which is Parachute Oil. There is a very important story here that you must know about Marico and how it used to be a B2B company, but it turned to a B2C company. Right? This is a very important point for you to understand. Now, in the past, Marico used to be a B2B type of a brand, in the sense that it used to create a lot of products, then it used to go to distributors and sell it via them, right? So, it was dealing with small businesses directly. It was not reaching to consumers directly, right? Consumers, it was not able to do. It was a B2B type of a company. Then Mr. Harsh Mariwal turned the things around. What he did was that he made Marico a B2C, direct to consumer type of a brand, and they were selling directly to consumers. Why? Because if you sell directly to consumers, the profitability of the company improves. Now, even HUL has been doing that. Now, you'll say, Akshat, okay, why did you tell this story and wasted our time? No. There is a very important point that I would like to outline here, is the fact that Marico in the past used to do cost plus pricing. Cost plus pricing means that Marico in the past, when it used to come out with Parachute hair oil, let's say a bottle of Parachute hair oil, let's imagine that it used to take them 80 rupees to produce that. then it used to add 20 rupees at the margin and sell it in the market. Now, if the copra prices, copra is a raw product that is used to make this hair oil. If the copra prices used to go up, it used to become a problem for them. Then it used to be, okay, 90 rupees production cost, 20 rupees. So now we'll sell it at 110. Their prices were not constant or consistent. They could not consistently increase the prices. Because of which, if the raw material prices increase, then the company used to suffer, because then the overall cost structure of that hair oil would go haywire and they would not be able to do a lot of sales. This was a problem and they were able to solve this by going B2C. This is a very important concept for you to understand. Now, HUL has done that consistently across different brands and has been doing it and will continue to do it. That is the power of B2C type of businesses, and that is one of the prominent reasons why HUL has been able to consistently increase its prices. Very recently, HUL increased its prices. People were scratching their head that, why the HUL stock price is going up. The reason was that HUL actually increased its price. And let me show you that article. So several articles of HUL, so they own things like Surf Excel, Rin, Lifebuoy. HUL has increased the prices anywhere between 3.5 to 14%. That's a huge jump, 3.5 to 14% on these basic commodity-like goods, not commodity goods. For example, shampoo, soap, these are all commodity-like goods. But because it has a HUL sticker on it, we are okay paying 3.5 to 14% higher. Similarly, because we have an Apple sticker on an iPhone, we end up paying approximately 1.25, 1.3 lakhs also. That is the power of brand, and that is the power that HUL has, that it can go and increase prices like this and people will continue to buy. Why? Because HUL has a very strong brand value, similar to Apple, so to say. B, it is a direct to consumer or B2C type of a brand. Therefore, it can do that. Very important point. Please note that down. Now, third and final point why I feel that HUL is still a multi-bagger stock is very simple, that there is massive room for improvement in profitability for a company like HUL. Now, let me show you a couple of data points here. Now, if you take a look at the profit and loss statement, you will see that since 2010, the operating profit margin has been going up. It is close to 24%, right? Very important. Now, HUL has increased its prices of products, so this OPM might go even higher. There is a very clear path how to take the operating profit margin high. This is the first key thing. The second key thing that you need to notice is that ROCE, return on capital employed, is 40%, which is really good. But you need to ask yourself that, hey, can it go up to like 60, 70, 80%? I would say yes. And this is the reason why I'm betting on HUL now. If you take a look at Nestle India, the ROCE, return on capital employed, is 139%. I'm not going to explain it to you what ROCE is. If you have not watched my previous videos, please go and watch it. Only then you will understand the concept of ROCE. So, the ROCE of Nestle India is 139%. Why is that? Because Nestle deals with slightly more luxurious products, so to say, coffee, right? All that stuff, which is availed by slightly more expensive customers. So, as a result, the ROCE has higher potential of becoming more and more positive. Now, if HUL starts creating sub-brands that can also be positioned to slightly more luxurious customers, their ROCE will also improve. Their operating profit margin will go even higher. With this improved profit margin, what will happen? The stock prices will double, triple, right? That is the bet that I am taking. Now, why am I bullish and why am I saying that the operating profit margin and ROCE of HUL will go up? Because if you take a look at the recent acquisitions by HUL, they have went and acquired Horlicks. They have acquired VWash. They have acquired Kimberly-Clark. They have done a lot of acquisitions recently. And what happens with acquisitions is that if HUL is acquiring all these brands, right? All these brands, what will happen is that initially their ROCE here will be low, right? Here it will be low, here it will be low, here it will be low, here it will be low. But as the companies, these different companies start integrating with the HUL brand, this overall ROCE of the brand will keep on going up. Why? Because HUL as a parent brand will understand and uncover some cost efficiencies in terms of running products that are currently run with GSK. Same, it will figure out ways to manufacture this VWash product more efficiently. Similarly, it will do some marketing maneuvering here. So, bottom line is that going forward, the ROCE, return on capital employed, will improve. These recent acquisitions do not become profitable from day one. They become profitable after years. Where did that happen? It happened with Facebook, Instagram deal. Initially, when Facebook acquired Instagram, everyone thought that, Facebook is paying a massive price. They are paying $1 billion to acquire Instagram. Just $30 million users are there on Instagram, who will go and visit this, all that stuff. Eventually it turned out that Instagram became one of the most profitable ventures for Facebook. It helped them acquire even WhatsApp going forward. So what I'm trying to tell you is that ROCE of a company like HUL will improve going forward, and this is one of the reasons why I am bullish on HUL. Now comes the final question, when are you going to buy this stock? I am waiting for this stock to consolidate. At whatever levels it consolidates, I am going to buy and invest a lot of amount, and I am going to show it to you. I hope you enjoyed the video. Give it a thumbs up and I will see you the next time.